Hi, everyone. Welcome to the Riverview Financing Information Webinar hosted by Times Group and Scotiabank. We're thrilled to be joining you today from our offices. We have an amazing presentation, an amazing group of speakers here to provide, I think, is going to be really valuable information. So if you're joining us today, you've made a great choice to spend an hour and invest your time in learning more about what's coming up here with the final closings and mortgage options at the Riverview project. We welcoming here today some of the Bank of Nova Scotia real estate team that financed the construction for Riverview. So we welcoming them, their partnership with Times Group, our partnership with them. Takes us back to the 1990s. We've been working with Bank of Nova Scotia for a very long time, and we're very proud to be partnering with them today to present this webinar. I'm one of the principals and the general counsel at Times Group, also a co-founder of T2 Condo Rentals.
Good afternoon, everyone. My name is Hamid Giraki. I'm a senior project manager at Times Group, and I'm also one of the co-founders of T2 Condo Rentals.
Hi guys, sorry about that, I was on mute there. My name is Sunny here. I work at Scotiabank on the interest rate hedging team.
Good afternoon, everybody. I'm excited to be here on this webinar. My name is Bessie Corrales. I'm the Senior Manager of Sales for the Home Financing Solutions, managing a team of home financing advisors.
All right, thank you. So without further ado, let's get started. The first section here that we'll be discussing is Times Group's final closing update for the Riverview project. So the Riverview closing schedule, it's very important that the Riverview clients are aware of what's going on behind the scenes at the building. PDIs and occupancies are now all done. Times Group has been working for months to submit and register the condominium. This work requires applying to the Land Registry Office in the city of Markham. We're expecting to get this condominium registered during the month of December 2023. That's this month. This may happen in a week from now, 2 weeks from now, but we expect to do it before the holidays. What does this mean? This means that we will be reaching out through Delzato Zorzi, the law firm responsible for the closings. They will be contacting the purchaser solicitors and advising of a final closing schedule. This final closing schedule notice will go out. It's at least a 30 days notice. And we are not prepared to send these notices out today. But today, during this webinar, we are able to let you know that these notices will likely result in final closings beginning at the end of January. This gives everybody on this webinar now just under 2 months to be able to have their mortgage approved and available for their final closing. Applications, therefore, for mortgage approval, we believe should begin now. The process can take a while depending on each purchaser's profile. So there's no harm in beginning immediately some of the background work that is required for approvals, so that when come mid-January or late January, you're in good shape and there's no stress or last-minute delays. At the same time, T2 Condo Rentals has now begun enrolling units for post-final closing services. So any of the T2 Condo Rentals clients that are on the webinar today, they will have received an email yesterday about how this early bird incentive program works. I'll go through it very quickly. I respect that there are many on the webinar that are not T2 Condo Rental clients. So for T2 Condo Rental services, after final closing, you're guaranteed the historical rate of $120 and $150 for 2 years, and you're getting February and March complimentary. Those are 2 months that are either partially or completely post-final closing. You're enjoying those 2 months complimentary, and your management fee will begin on April 1st. The reasons to stay, I won't go through, but the T2 Condo Rentals service is intended for our investor clients to provide peace of mind and hassle-free experience in investing in a condo rental property. So I'll now hand it over to Hamid, my colleague, who will discuss rental market trends at Riverview.
Great, thank you, Assam. Before I begin, I just want to let you guys know where this data is coming from. So the rentals at Riverview began in June of 2022, but what I'm presenting here is the rents for buildings A and B, which commenced in April. So we're ignoring and not presenting the data from building C. This is for buildings A and B only. So this first slide is for the 1-bedroom plus den units, starting from April 2023 and till the end of November 2023. Here we can see that the rents for these 1 plus den units started at $2,450, and they've increased over the months, and they're hovering around $2,650 over that period. So in the pink line, actually, let me explain the graph a little bit. The pink line is the average lease price over the months, and the blue bar graph below is the number of units that have leased. So the number of units are on the right axis, from 0 to 30 units per month, and the average rent on the left axis from $2,300 at the bottom to $2,700 at the top. So here, over this period, we've seen the rents increase by 7.7%. And as of, we had a big summer rush, and after the summer rush, the rents have pretty much gone steady for the months of September, October, and November, close to $2,650. And currently, our 1 plus den units that are available for rent are ranging between $2,600 and $2,650. This next slide is the 2-bedroom information. The 2-bedroom information, the leases began in May of 2023 at around $2,800 per unit, and they've increased steadily over the summer and into the fall, and they're at $3,050 now. And that represents an increase of about 8.9%. There was a large number of units that were leased during the summer and into September. And since then, the number of units available and leased have decreased. And that has actually resulted in a spike of the actual rental rates. In terms of our inventory, we have some 2-bedroom units available. They range from $2,900 to $3,100 a month. Now, on a per square foot basis, that translates into a range of $3.58 to $4.04 per square foot. Our final slide here is the Riverview rentals for the 2-bedroom plus den. I want to note that we do have a small number of 1-bedroom, handful, and some 3-bedrooms, but since there's not that much information, we're not showing those slides, but they will be in the final slide in the aggregate numbers. So in terms of the 2-bedroom plus den units, the rent started in May around $3,050, and they've steadily gone up through the summer. And we see them actually decreasing since September, and we're attributing that to families wanting to move into certain school districts, and usually that activity happens before the academic year. So from September onwards, there's been a slight reduction in rents, but right now we're sitting in just slightly under $3,300 per month for the 2 plus den units. Now, in terms of our inventory, the current inventory is sitting at around $3,400 a month, or $3.22 a square foot. This final slide summarizes the leasing activity in towers A and B at Riverview and compares that to the rest of Markham Center. So the rest of Markham Center information is available on a quarterly basis. It excludes the Riverview building itself, including towers A and B and C. So here we can see that in Q2, we had 54 leases in buildings A and B. The average rent was $2,763, and that is about $100 more than the market rent for the remaining units in Markham Center, which sat at $2,663. So on a aggregate level, the rents in Riverview are higher than the market, but on a per square foot basis, they're basically in line, maybe 1% lower here, at $3.49 a square foot in Q2 versus $3.53 a square foot for Markham Center. The reason being is that the units in Riverview are generally larger. There's more 2-bedroom units, there's more 2+10, there's more 1+10 units than generally in the market. So that actually results in a slightly lower per square foot price. In Q3, it's similar, about $100 difference in terms of the actual rent, and the rent per square foot is the same, about 1% difference. We are also showing here the Q4 data, which is the October and November rents for Riverview. And as you can see, the average rent is close to $3,000 a square foot, 41 units leased during that period, those 2 months, and an average rent of $3.51 for those units. So this gives a summary of all the hard work that the T2 team has put in place over the past few months, and actually starting last year at Riverview, renting many units. As you can see, for instance, in the Q3 data, we leased close to 100 units in that quarter, and the rest of Markham Center, there was only 232 units. So now I'll turn it over to the folks at Scotiabank.
Thanks, Amin. So this next section here, we'll be focusing on essentially what's been going on in markets over the last few months, as well as what our Scotiabank forecast is. So in front of us here, we have our official Scotiabank forecast on various economic indicators. I think what applies mostly to this audience here is going to be the top left, where you have interest rates, as well as on the middle right side, we have inflation. So I'm sure you all have seen interest rates have come up significantly over the last couple of years. To give you some background, what kind of got us in this situation is when the pandemic first struck and economic activity was going down, the central banks, or essentially the banks who control the money supply, they were in a position to have to cut rates very quickly. So they cut rates all the way down to 0.25%. And the rate that they essentially set is what then drives, mortgage rates, loans, prime rate, and everything. So that rate was down to 0.25%, which is effectively kind of the lowest they can go without going negative. And they held that rate for over a year. And the economy, on the other hand, started to recover within kind of 6 months. We had vaccine research and distribution come out faster than expected. The whole province or the whole country was vaccinated very quickly. People were returning to work or working from home. So you start to see this resilience in the economy, but the central banks were still keeping rates very low to kind of help the economy out, which perhaps they didn't need after a certain point. And that generated a lot of savings for consumers, as well as higher wages, because companies were paying more because there was kind of a job issue as well. And as soon as the economy opened up a little bit, all that demand hit the market at once, right? So if you look at travel, you look at restaurant bookings, you look at just consumer spending on discretionary items, it increased significantly. And we saw inflation rise from kind of their target of around 2% up to over 8%. And I'm sure everyone has seen that day to day, whether it's through businesses or regular spending, where inflation rate is so much that they had to start cutting rates much sooner than they expect, hiking rates much sooner than they expected. So over the last couple of years, we've seen the central bank rate come up from 0.25 to 5%. Our official forecast is that they're at the top. So if you look in the top left, you'll see the Q4 2023 BOC rate ends at 5%. So meaning they don't suspect that there'll be any more hikes, and they see cuts starting in 2024. So they see about 1% of cuts next year, and 0.75% cuts in 2025. So that's what our economists believe. But in the future slides, I can speak to how they've come up with some of this. So the main slide and the main kind of graph that I really wanted to show to everyone here was this one here. So this compares CPI. CPI is another word for inflation And it compares it from two different time frames. We have the red line, which is the mid 1960s to early 1980s, which was a time where inflation was double digits and interest rates were also double digits. And it compares that time frame to 2014 to now, over the last roughly 10 years. And you can see that that graph is very, very similar. We've had the highs, we've come down significantly, and over recent months, we've seen a little bit of an uptick again. And that really worries central banks. And that's why we haven't seen rate cuts yet, because the last thing that the Bank of Canada wants to do at this time is to prematurely cut rates, thinking that everything's good. We're in a position where we can now start cutting and the economy's good. And then we see this run up in inflation again, and they would have to start hiking rates. And this time around, they're not starting at 0.25. They're starting at 5%. So any higher than this could be detrimental to the economy, which is why we've seen them kind of hold off. Even today, there was a meeting by the Bank of Canada. They held rates, and their communication was that they're still going to assess economic data. They don't want to say that everything's good yet, and they're also prepared to hike if needed. So it's more of a kind of wait and watch situation at this moment. Another factor that's increasing this inflation and causing central banks to be on pause for a little bit is employment. So the two things that they generally watch out for is where is inflation at, and they want to keep that around 2%, as well as how strong is the jobs market. So the graph on the left shows that pre-pandemic, or right after the pandemic, we had about a million or about 2.5 to 3 million jobs lost, and we've recovered all of those by kind of mid 2021. So all jobs lost in the pandemic were recovered, and that red line is where we were pre-pandemic. And you can see that the number of people working now is almost a million jobs higher than where we were pre-pandemic. So the employment market is stronger now than it was in 2019. And at the same time, although inflation has been very, very high over recent months, like I said, even months where we've seen up to 8%, wage inflation has been outpacing it in Canada, meaning that employers have been in situations where the job market's so tight, there's not enough supply, there's not enough demand, but there's a lot of supply. They have to then pay their employees higher wages to attract them to come work for them and also to keep them there. So despite this inflation being so high, the fact that wages are growing even faster brings back to the story that if people are making more money to outpace inflation on an aggregate basis, they will still go then spend on vacations, on restaurants, on any discretionary spending, which then fuels inflation again. So that's one of the other factors that they're watching very closely, where they want to see some softness in this market before they feel confident that rates can be cut. We always speak to our clients about forecasts, and we always say it's a great point to start. You get to kind of see what our economists, where people that look at this all day, they assess all different factors and they put out these forecasts. It's a great starting point to get an idea of how some of the professionals are looking at it. But just to kind of hammer home the fact that how unpredictable markets have been over the last couple of years, this chart here shows the revisions our economists have made to their forecasts over the last couple of years. So each dotted line is where they saw the interest rates going over the next couple of years. So initially, our economists are expecting that by Q2 2024 we'll be at 3% in terms of the Bank of Canada rate, which is now at 5%. And each of these revisions was because there was more data coming out. The jobs market was stronger than expected. Inflation was still higher than expected, and they had to kind of backtrack on how fast they thought rates were coming down. And eventually, now we're at this red line here, where it looks much more modest in terms of how fast things are going to come down, and they think it's going to take much longer to get back to somewhat normal levels. So this is kind of, it ties back to the fact that if you're looking at floating rates versus fixed rates, it's always good to keep in mind that, these forecasts and what you see on the news and headlines is a good starting point, but it's a very, very hard market to predict at the time. And this last slide here in my section is just kind of just summarizing some of the points we've seen. So we've seen very, very aggressive rate increases over the last couple of years. The consensus between most of the Canadian banks is that we are now at the top, and they start to see inflations, we start to see rates coming down over the next couple of years. Two main points, like I mentioned, that they're watching very closely is inflation. They want to see how fast that comes down and how long it stays lower rather than just a couple of months where it dips, as well as the jobs market. And they want to see that, that job market needs to soften and wages need to not be outpacing inflation before they'll feel comfortable cutting these rates. But as of now, our official forecast is that we're at the top. We'll see 1% of rate cuts next year and 0.75% in 2025. However, it could be revisions to this. So anytime you're in those decisions or in the situations where you have to make that type of decision, we would just recommend keeping that in mind in terms of choosing between fixed and floating rates. But if you have any questions, you can always reach out, and we're happy to help.
Okay, today I'm going to talk to you a little bit about our Mortgage Plus program. I'm also going to talk to you about our underwriting model and our rental policy, which is one of the best amongst the five major banks. Our Mortgage Plus program was recently launched, and the purpose of this program was basically for us to be able to wrap our arms around our clients and offer them at the same time preferred rates. We understand interest rates are high, and we're looking at a bundle approach for our clients. So basically, in order to qualify for the Mortgage Plus program preferred rates for your mortgage, you would have to obviously have a mortgage, open up a day-to-day banking account. You can either open up an investing account, obtain insurance coverage on your mortgage. The purpose is for us to just develop a relationship that's going to ensure that you get all the services and products that you need. As a result of having this bundle program, you will be offered preferred rates, which differ from our posted rates. Our underwriting model is we're one of the only financial institutions that has this model. The process is very straightforward from beginning to end. Our home financing advisors work with one underwriter for all their deals. The good thing about this is that they get to develop a relationship with this underwriter, and the understanding of working together to make the deal work is a lot better. And our approval ratio right now is sitting at approximately 96% approval. I think that has a lot to do with the fact that the underwriter and the advisor both communicate to get the deal done. Our underwriters are also commission-based, which means that if the deal doesn't fund, they don't get paid. So rather than simply make a phone call out to the advisor to say that the mortgage has been declined, they actually work together to find ways within policy to be able to get to an approval on the application. And it makes the world of difference. As a result of working with one-on-one, our turnaround times for approval are much quicker. I know today I have confirmation that for the appraisals, sometimes I don't know if, in the past, we've experienced some delays in getting appraisals done on properties. We do have the commitment of a 24 to 48 hour turnaround time on any appraisals for Times Group, Riverview condos. So I'm excited to say that that won't hold up the process. One thing that is good is that you'll have peace of mind knowing that once you get a firm approval from us, your mortgage will close on the closing date. And so we're excited to partner with you on that. The documents is very important. So when you do work with our home financing advisors, they will give you a list of required documents to get the application processed. It is imperative that those get sent in to them as soon as possible so that they can actually get that turnaround time done for you a lot quicker than normal. Our rental policy is one of the best investment property policies amongst the five major financial institutions. One of the main differences is most financial institutions can only go up to 5 properties, which means an applicant cannot own more than 5. With Scotiabank, our applicants can own up to 10 properties, and we're willing to finance for that. Our maximum loan to value ratio is at 80%. And we also cover, it doesn't qualify in this on Times Group Riverview, but we do up to 4 units, so 4 plexes. I know, we're excited to partner with Times Group on this, and there is a lot more detail and information. I know that some of you have already reached out to some of the advisors by just receiving this invite to this webinar. So I'm excited to see the partnering that we're going to do. We promise the best in-class service, and we're there to help you. So I know there's going to be a question and answer period after this. So I'm going to bring on in my 3 advisors in case you guys have any mortgage inquiries. So we have Lee Ruding, we have Yang, and we have Grace Lee. And they're 3 of my top HFAs on my team, and they're ready to help and assist you with any of your mortgage financing needs. Thank you.
Thank you, Bessie. That was great. And Sunny, that was very, very informative. I think that the announcement today was also very interesting. We were hoping for a deep cut, or at least a signal that a deep cut was coming soon, and we didn't get that. So I will also do the same and just make sure that the audience here is familiar with who to contact for which purpose. So myself and Hamid, we can be more or less contacted to discuss anything relating to Times Group or T2 condo rentals, with things relating to the sales office matters, final closings. That is managed out of our sales office, and Dimple is happy to help there. And finally, for T2 signups, Katrina Lowe will be heading the Riverview team in finalizing and enrolling everyone. So we've got a great amount of time, about 30 minutes left. I've been watching the Q&A. A lot of the Q&A is going to require us to just go back a little bit, and I'm going to do them in order. And so I may ask to just go back to some of the slides that were presented earlier. Won't go through them in as much detail, but we can flash them on the screen, so make sure that anyone who arrived a little bit later can get their answers quickly. So the first question is from an anonymous attendee. When you say PDIs are done, you're speaking only of the initial PDI and not the one-year PDI. Yes, when we talk about the PDI, we're talking about just the delivery of the unit, the initial delivery with the keys. So there's no more units under construction that are then awaiting delivery to the owners. So that's what we mean. I think that is clear. I think you understood that correctly. The second question is has to do with our management fee for T2 service, and that is, so let me go through that again. The management fee that is being complimentary for people who enroll with T2 condo rentals is for February and for March, and these fees have to do with a rental management. So all of the work that goes into ensuring that the tenancy is in good standing and stable, and repairs and maintenance for the inside of the unit. This is not the condo common area fee. The condo common area fee is administered by Times Property Management, and those fees are automatic. They never stop. They've been payable during interim occupancy and will continue to be payable every month without any exceptions. So when I refer to the management fee here, I'm talking about the rental management fee. I have a question from UT Tam, and this question I think is for Hamid. UT Tam is asking if we have information for one-bedroom rents. You can flash on the screen. Hamid, if you want to just quickly explain where we are maybe currently with one-bedroom rents.
Sure. This slide is for the 1 bedroom plus 10. So the questions about the 1 bedroom rents, I do have that information, and the average rents for the 1 bedrooms are $2,450 in buildings A and B, and there's less than a handful of units that actually were available. There aren't that many 1 bedroom units in buildings A and B, so that's why we don't have a slide for specific to those types of units.
Okay, wonderful. Thank you, Hamid. Okay, I have 2 questions relating to the update for final closing. So if we can put that slide back on, and there's actually more than 2, there's a couple. So let me dwell on this for a moment. The closing schedule is a formal notice that will be sent from Delzato Zorzi to your condo lawyer. That notice goes out and it sets the closing date. We're not doing that today. What we're doing today is we're giving you a sense for when those closings might occur. And as of now, based on where we're at with the registration of the condominium, that sense is late January. So think of the last week of January or a week later, in that realm. That is what we're talking about. That gives you just under, I think, 6 or 7 weeks to get your applications for mortgage approval started and to get your approval. And I think, Bessie, if I can ask the HFA team, if folks are able to get their applications, started within the next week, they should be easily able to get a mortgage commitment by mid-January. Would that be fair to say?
Yes, it's possible to get it approved for like within a week or two, depends on the customer's situation.
Right. Okay, great. Yes, I understand that, the holidays, some people like to take 3 weeks off, 4 weeks off. That may play a role in how we need to work. But one of the reasons why we wanted to have this announcement and this webinar for all of our clients is to take advantage of these weeks before the notice go out to get everyone working. I've got a Zoom user asking, so what day is the closing? So the date of the closing, we are not setting today. We are just announcing a general timeline as to when the closing may occur. Okay, I've got a question mark. Sorry, can you give a general how the preferred rates are versus the general public? Okay, that's a question for the HFA team. They're asking, can you give a general expectation of how the preferred rates are versus general public? So anything special here for Riverview clients?
We cannot go to like just dollars and cents, but basically, Time Group negotiated a preferred rate with Scotiabank. And these
Currently, as of today.
currently, as of today, we have raised like it's 2-year fixed at 6.64, 3-year fixed at 6.25, and 5-year fixed at 6.04%. And that depends on you join our Mortgage Plus program that Darcy mentioned earlier.
Okay, I've got another question from a Zoom user. How does Scotiabank account for rental income for mortgage application?
Basically, we're not going to go to the detail, the nitty-gritties, how do we calculate, but we calculate it every day for the past how many decades. But basically, we have a very favorable treatment to the rental income, either it's from a non-subject or subject. But I personally did the test. It's like your gross rental income is counted. It's not in the policy, but that's my personal test. It's like 125% of your gross rental income is counted as income. So that's why it's like when you go to other banks, they cannot approve you at all either, or they cannot approve as much as we do.
Okay, thank you. The next question, there's two questions that relate to VTB offers. So VTB offers are VTBs that were part of a promotional program. If you have a VTB offer in your purchase agreement, that VTB offer stands and is, the details are set out there. Nothing has changed with respect to that. We have an anonymous attendee asking, again, team from the bank, once you give me a rate, how long is it locked in for? It's a great question.
So for the rate, we can lock it for 120 days, but which is based on the market. If the rate keep changing, usually we will hold a better rate for the client.
Wonderful. So 120 days for locking it in, and if the rates go down, then the client can improve on that.
Yes.
Okay, that's great. That underscores, the benefit of picking a bank, whether it's BNS or another bank, and making that application now. Another question from an anonymous attendee: what is the difference between application of mortgage at Scotiabank branch and with your team, the HFA team?
So for us, for the branch, they're doing the very easy application. For us, we do have more special program because today's this rate is more higher. The qualified rate is higher than the usual. So most of the client, they may not qualify for the regular programs. For us, we are more convenient and flexible time for them because we can call us on 25 hours and 7 days. For the branch, you need to go to there for their business hour. Maybe you need to make the appointment to go there to with the financial advisor over there. So which is more easier for the client because especially this day is close to the Christmas, people they arrange the holiday or whatever. So for them, let's take all the benefit to easier to reach few of us to do the mortgage for them.
Can I add to that?
Yes.
Basically, the bank's strategy is we're steering out mortgage out of the branches, and they send the majority of the deals to us. So for instance, a lot of programs have stopped at the branch. For instance, if you're a new immigrant, branch doesn't take care of it. If you are a business for self and then your reported income is not that satisfactory, but we have a way to do that. And for people with high net worth, the branch don't do it. But also, would like Grace, Yang, me, we've been sitting here, we've been doing it for like 20 years. We do nothing. We only do this one thing. We scrutinize everybody's situation. We have tons of experience, and we have a lot of strategies to get a mortgage approved. Whereas the branch is more, those my colleagues they are usually younger entry-level financial advisors. They don't have as much experience as us.
Perfect. Well, yeah, it seems like if you're an investor, especially with a rental unit, possibly you have a couple doors or you have a high net worth, that HFA team is definitely like a suitable fit. I have a question from UT Tam. Is there an order of which building will be closed first? When is the end of the closing period? When will they all be done? That's a question that is being answered by Delzada Zorzi. So Delzada Zorzi will look at the buildings and set the schedule and the cadence of how many closings per week, per day, per week, how many weeks it takes, where they want to start. That has not yet been determined. I have a question from Amit Hira, and it's a very specific question. It has to do with a HELOC limit and whether Scotia uses a payment based on a different various balances and ratios. If I may, Emmett, we can have that email, that question emailed to one of the HFA teams. I think it's a very technical question, and I think it would probably be best to answer it by way of email.
Actually, we can answer that very quickly for you.
Oh, you can? Okay, great. Go ahead.
So go ahead, Liru. The difference between the way we calculate HELOC and the way other banks do.
Okay,
on balance.
So just give you one example. I personally myself did for one customer. His house was free and clear, and then I did a line of credit of like say 780,000 line of credit. Then after 10 days, he turned around. He said, "I bought another rental property." So I applied for the mortgage for the rental property, but that $780,000 line of credit, which he didn't borrow a single dollar, does not count as liability at all.
So other banks use the line of credit limit. We use the line of credit balance to calculate payments.
Correct. Yeah.
Okay, great. Thank you.
Yep.
I've got a question. What is the projected monthly management fee costs? Hamid, I want to say something in the neighborhood of 50 to 60 cents a square foot. Do you think that would be fair?
Well, it's set for the first year. Yeah, it's slightly lower than 50 cents a square foot from what I understand.
Okay, so slightly lower than 50 cents a square foot. Question for T2 Rentals. Why was rental data for building C excluded?
We wanted to actually show the information for this year. Building C is excluded because a lot of those units leased out in 2022. So they were doing releasing, and we took the information from buildings A and B because those were all brand new leases versus releasing.
Yeah. Thank you, Hamid. Okay, I've got the next question here, and the questions are flowing and keep them flowing. That's why we're here. We still have another 17 minutes. So the question is, does Scotia provide a rate hold / pre-approval for rentals?
No, for rental properties, it's because of the calculation involved too many factors. So like the market rent, right? So we don't provide the pre-approval for rentals. But since the closing will be within 120 days, we don't need the pre-approval. So we just do a standard application. So it's not a factor for the customers.
Right. Okay, great. Yeah, I think it's very safe to say that the 120-day rate hold is more than enough for the Riverview final closings. Can you provide the contact person and email address for Scotiabank regarding mortgage application? Thanks for the question. I think the screen here is the answer to your question. And this deck and a recording will be provided by email, so you will have all of this. You will have all of this sent to your email if you registered for the webinar. Building C was occupied over 1.5 years ago, where mortgage rates were lower then. How come closing was not done then? That's a great question. This is a very large project. It's a one condominium. It can only by law have one final closing, and all of the units have to be built, delivered, in order for the condo to be registered, which is a prerequisite for the bylaws being registered, which is a prerequisite for us legally being able to complete a final closing. So, had Building C been its own condo, it could have been final closed earlier. But because all 3 buildings form one condominium with shared amenities and one condo corporation, the final closing can only occur once every unit is done. What about Building C rental info? How's the 2+10? And for the T2 rental service, will the first month of the new lease payable to T2 rental team? Let me break this down. So the Building C rental info, if you require info, the historical info for Building C, we have it, send us an email. As Hamid said, we excluded it because we wanted to focus on the trends more recently this year, and Building C was a lot of the rentals, the initial leases were done in 2022. But we have the 2-bedroom plus den information for buildings A and B up on the screen. I think that if you're leasing your unit in Building C, releasing your unit, and it's a 2-bedroom plus den, this data is very helpful. Whether you're releasing or you're thinking about your first year N1 notice of rent increase, this is really what you want to be looking at. And for the T2 rental service, will the first month of the new lease payable to T2 rental team? So I'm not sure exactly what the answer here is. Sorry, what the question is.
That's a question about commission. So each time there is a new lease, there's a commission payable for the new lease. If it's just a renewal, then there is no commission. It's the same tenant that's living in the unit. But if there's a releasing, there's a commission involved.
Yes. Yeah, I think I was going to get into that and then also explain what the entire fee structure. But yeah, so the releasing fee of 1 month, which is a fee that we usually pay half to the tenant agent and half for our listing for the work that's required to list the unit. That is chargeable only when you're getting a new tenant and a new lease. Arafang asks, once we get the exact closing date, is still possible to adjust the date, a delay or earlier? That question will have to be lodged through your condo lawyer and sent to Delzato Zorzi. It's case specific, and generally extensions to closing dates are not granted, but you can still make the request to your lawyer, and depending on the circumstances and the length of the extension, it may or may not be granted. Could you please show the slide of mortgage agents' contacts again? Of course, let's put it up. This will be emailed, but if you want to take a screenshot or just note some phone numbers and emails, you can do so. To the next question. Do you need to be with T2 to get the preferred Bank of Nova Scotia mortgage rates? I think the answer there is no. I think when the BNS team reviews your application, they will be reviewing your lease, and they're not going to. I don't think they're going to give any weight to whether you've hired a professional company to manage your affairs or you're doing it yourself. I'll go to the next question. For Scotia folks, is there a recommendation on what term to take given the forecasted rates? Is the recommendation to do variable or fixed? That's a great question. I think on everyone's mind. Do you guys want to give some general indication of what you think?
That's all depends on your own situation. Like some people, they say, I only want to keep it for a year, then do a 1-year fix. Or I'm thinking about to sell it within 2 years and do 2 years. Then but if you only look at the interest rate, nowadays, like my customers, right? They go with like, say fixed rate, short term, the lowest. So they go. So nowadays it's like a 3-year fixed. A short term is the lowest. But if you say I still want to go with the lowest interest rate, then you go with the 5-year rate. But then we like it all depends on each individual situation. So then when you eventually apply for the mortgage, Grace, Yang, and I will talk to you in more details and look at your own personal plan and to find out to optimize your choice.
Yeah, I just want to add something. We are a home financing advisor. Our job is to pick the right solution for unique customers. So everybody have a different scenario. So we got to ask you questions and understand what you want and what's your future plan. Then we provide a solution. So the rate, for my personal, I will say it should be the second or maybe the third consideration. So the first thing is we found the right solution for the unique customer. That's what we do.
Sorry, go ahead.
There's another unique trait about our product. Like say we have this Scotia Total Equity Plan, where you can have up to 3 mortgages. If you're not sure you want to do 1 year or 2 years or 3 years, you can split up your mortgage into 3 portions.
Very interesting.
Yeah.
Okay, we have a question here about the HELOC again. I think given that we only have 8 minutes and another 20 questions to answer, I'm going to let the whoever's asking that question just check the recording. We have already answered that question. We've got other questions here about the variable rate and what rate to choose. I think that those are great questions, and I think it best to email the team at Bank of Nova Scotia to discuss what is best for you, because it's a personalized decision.
Maybe the Scotia team can let us know what the current variable rates are.
Sure.
Yeah, as of today, our variable rate is like a prime minus 0.3%. So we just get the news. Bank of Canada didn't raise the rate today, so the prime rate right now is still that 7.2%. So
actually, our variable rate is different than the other bank. So if the client want to get more detail, just call us. We can answer all the questions. I know the time is much time left, so we still have a bunch of questions, right? So we can discuss with the clients more detail. So just call us. So we will discuss one by one.
Bessie and the team, is there a premium for rent-related mortgages?
Yes. Go ahead.
Yes, we do have the premium on the rental properties. Yeah.
And would you be able to say what it is?
Yeah. Oh yeah, generally like 0.35% higher than the primary home, but it depends on the situation. If a customer like fully service customers, they're dealing with the Scotia, have a deep relationship. Yeah, we try our best to get lower than the regular rate.
Okay, thank you. Regarding the T2 management fee promo, am I locked in for 2 years? Regardless if I'm able to rent my unit or not, am I obligated to pay for 2 years? This is a great question. Our terms are all flexible and our contracts have no fixed term. So when you enroll with T2, you can cancel your contract anytime with 30 days notice for any reason. So there's absolutely no locking in. Now, you are locking us in for the rate. We are promising this rate for you for 2 years. But if you want to take your management of your unit internally, you can do that anytime. For newcomers, any special program, and I'd like to bundle this in. We've got a question here, a comment. My English is not very good to understand everything. Could you guys just quickly, perhaps in Mandarin, explain, in Mandarin a little bit about yourselves and encourage anyone who's listening in who is Mandarin speaking to contact you, because you are obviously all Mandarin and Cantonese speaking. Perhaps that would be a good idea.
Actually, we all speak Mandarin. We all speak Mandarin, so you can contact one of us.
Yeah, let me.
Either, yeah, any.
我们3个都说这个国语或者普通话的，所以的话，如果你们有任何问题，就直接打电话，给任何一位，我们都可以用普通话回答你们的问题。Thank you.
Thanks. I've got a question here around advancing final closing dates. The person to contact, that's going to be Dimple in our sales office. She was on one of the slides. It will be up in just a moment. You can also contact Hamid or I, but the sales office is the appropriate person to discuss that with. If the property is purchased under a holding company, can you do the mortgage? What are the requirements?
Yes, for holding companies, we do offer that solution for customers.
Great. So there are a few questions here about whether Scotiabank will be able to offer a better rate because of Riverview and Times Group as compared to going to another bank. Do you guys want to address? Do you want to address that question?
Actually, we are on this market every day, right? We know the market intelligence. Our rate is already better than other banks. Our preferred rate. Just for instance, a customer just work for TD Bank or something, and he's the staff there, and he said he got a staff rate 3-year fixed at 6.4%. That's the kind of market intelligence I got personally. And then what we offer is 6.25, so it's better than their staff rate.
Wow. I've got a question here about the preferred rate being available after the VTB is over. I think these VTBs are in for a few years, so it would be probably best to just write the HFA team once that time comes and see where the Bank of Nova Scotia is at. I suspect they will still continue to be very competitive, if not the best rate in the market, in 2024, 2025. I have a question here. Can you comment on if the builder would charge back the difference occurred from the increased rate since the interim? I'm not entirely sure what this question is asking. I mean, do you have a sense?
I think they're asking about the interim occupancy fees, which were calculated based on the rates. So, for instance, in Building C from last year, they will all be adjusted based on the requirements of the Condo Act. So they will be adjusted.
Okay. Once the building is registered, does the building allow for short-term rentals? That question is answered in the declaration. I don't have it right in front of me. I know that there is a minimum term. So if you're talking about short-term rentals being, days or weeks, I can say confidently that the building does not permit short-term rentals. I think the standard is 4 or 6 months minimum. So stuff like Airbnb or other type of overnight stay arrangements, those are all prohibited by the declaration. Is there a mortgage rate sheet as of today that can be shared? I'll leave that with Bessie. I don't know if you're interested in sharing a mortgage rate sheet. It could be attached to an email if you're prepared to do that. Just call. Okay.
Yeah, if they call, they'll also, and they do an application, their rate will then be, we prefer not to share rates via email. But when we do an application, they get a commitment letter, which shows our commitment to them for that particular rate. Our rate sheets are subject to change, obviously. So just kind of having them float out there. We don't normally attach them in that way. But if they call, we're more than happy to provide them with the commitment letter once the application is completed.
Yeah, because I
It's
just
changing
want that,
all the time.
Yeah, it's a change. The rates change all the time, so we don't want the misleading the customers. So without the application, we cannot lock the rate for the customer either. Right. So it's better to contact us and put the application. Then you are safe.
Some good news is that the fixed rate has actually gone down. I know prime rate hasn't changed, but the fixed rates have gone down twice already in the past 2 weeks. So that's some great news.
Certainly is. All right, I've closed the question and answer. I'm going to try to go through the remaining questions very quickly. I want to respect that the allotted time for the webinar is just about up. Do we have rental info for 3 bedrooms, please? We do. You can contact Katrina. She was on
Very
one
quickly,
of our.
I can just give that information: $3,450
Okay.
for recent rents.
I'd like to go through the questions that we have so far. Any other questions we can absolutely answer through email. What is a rental to owner occupied ratio in the condo? Don't have, that's a great question. I don't have that offhand. I think it's something in the 40% to 60% range. So rental 40%, owner occupied 60%. Nadia asked, sorry, not sure if this already asked. Wondering if there's a sense when what the maintenance fees will be at final closing. So the common area maintenance fees, we answered that question, in and around 50 cents or just below per square foot. Do you mind list the services again that T2 rental will provide after the closing enrollment? Is it including dealing with tenants for non-payment? The answer to that is yes. And you can find out more by going to the T2 Condo Rentals website. We have some videos and some explanatory notes and a Q&A for all owners, so that they can understand what it is that they get for that T2 condo rentals experience. If my condo is already leased to a tenant, will the monthly fee for T2 be charged? So if you are a T2 client and you enroll, your management fees will begin on April 1st. February and March will not be charged, but on April, you'll begin being charged $120. So the complimentary service that T2 is offering up until now ends at the end of January. We're asking our clients to either enroll or de-enroll by the end of January. The ones who enroll get February and March for free, and April they begin to pay for the service. And the service includes a litany of services. It's all available on our website. It's meant to address all of the day-to-day management that a condo rental investor would face. What will be the approximate cost of condo maintenance fees after final closing? We answered that question, 50 cents a square foot. Is the final closing schedule negotiable? I answered that question. That request should come through your lawyer, through Delzato Zorzi. What's the current 5-year variable rate offered by Scotiabank HFA team? Let them give us that figure. Do you have that figure, Bessie? Current 5-year variable rate.
5.3.
Yeah, that's a question. We already answered that, like I said before. So there's a last question they have, but I think we have a recording, right? If the customer didn't get the
prime minus 0.3% if it's owner occupied.
Yeah. Right. Okay. Would you match lower rate we get from other bank? I think that's a question best to address through email to the HFA team. That's obviously case specific. For the T2 rentals rate discount, is this a limited time offer and to when? Yes, it is a limited time offer. The offer expires at the end of January. If you're signing up after the end of January, then you're not going to get the benefit of these historic rates. We're also the first 100 units that sign up, I should mention, are eligible to win a new iPhone 15. So that's another reason to make the decision and sign up early. When is the closing date of the building? We addressed this. The closings are scheduled to start. Our sense is at the very end of January and early February. Can we ask for a delayed closing? I've already answered that. That request should come through your condo lawyer, through Delzato Zorzi. Just want to say thank you. Thank you. I will thank everybody in just a moment. We're almost at the end here. Is this webinar recorded? Yes, it's been recorded so that it can be shared with anyone who wants to rewatch it or anyone who missed the webinar. Can you comment on if the builder would charge back the difference occurred from the increased rate? I think Hamid's answer a little bit louder this time.
Can you hear me?
Yeah.
So the initial rates were based on the rates in effect at that time. In your statement of adjustments, they will be revised to the actual rates that are required to be charged to you.
Okay, thank you. And when is the closing? It's up on the screen. The sense is final closings will occur in the very end of January, beginning in February. Now, that is subject to this registration of the condominium occurring. imminently. So as long as that happens, we don't foresee any longer delays. And a final notice will be sent to your lawyer so that you know exactly when your closing is. And not all of the closings happen at the same time. Obviously, there's a sort of a schedule that is set by our lawyers. So your closing may not be for weeks later if your closing is not one of the first closings that occur. But all of those decisions have not been made. So we're not able to share that information just yet, but you will get a notice from Dels Auto letting you and your lawyer know. The big point here, takeaway for today, is start your applications now so that you're not rushing to do them in January. The applications can be processed by the HFA team. Rates can be held for 120 days. Do your due diligence now, enjoy the holidays, and know that in January, your affairs are in order. So with that, I think it's a great time to thank the BNS team and for putting together this seminar. This is the first time we've done this for any of our projects. We're very proud of the work that went into preparing for today. Thank you all for attending, for your great questions. I hope this was informative. This slides will be shared with you. The contact info will be shared with you. And so if you have any other follow-up questions, feel free to either email a member of the Times Group team or the BNS team, and we'll endeavor to give you a great service. But otherwise, we can conclude today. Thank you very much for joining us, and have a great rest of the week.